the best business podcast.
So Phil, you've been speaking to a lot of haulage businesses this week.
Yes. Yeah, well, I thought it'd be interesting actually. We approached quite a few haulage companies this week, coming up to the Christmas period. A lot of haulage companies now start getting really busy. They might be working for Lidl, Tesco, Asda, or Amazon. So it's a busy period coming up. So we do a bit of proactive sort of reaching out. But I thought I'd be interested to show the watchers and let our listeners see how we sort of analyse balance sheets and take a snapshot before we speak to a customer so they can see what we're looking at, have a chat with them. We know we look at things like the trade debtors, the cash in bank, retained shareholder funds, and we just look for any sort of potential red flags. So I'm just going to sort of run through what I was looking at, and then I'd like to get your comments and opinion.
Yeah, so trade debtors, cash in bank and assets, yeah?
Yeah, I always look at retained profits as well, shareholder funds, because a lot of these businesses will be self-funding, and we're going to look at the potential risks of that. There's benefits and there's potential risks. So I'm going to show you now, and some of our watchers might be able to see what I'm doing here. So we're looking at this haulage company. So we can see they've been trading for a number of years. On the last set of accounts in September, that is September 2023, we can see they had a sharp rise there. You see from 2022, they had a sharp rise from 0 trade debtors to 229,000 trade debtors. So that seems like they perhaps won a contract rather than just doing work and getting paid immediately there, or within 7 days. They're probably doing some sort of contract, would you say?
Yeah, so increased turnover or potentially slower payment terms, yeah?
Yeah, possibly, yeah. So taking on more and more work, and when they submitted their last annual accounts, there was outstanding £229,000. So there's a couple of things that we're going to look at. We've got tangible fixed assets with a haulage company you'd expect. That would probably be lorries, trailers, could potentially be a building as well, but this typically would be the vehicles. So we can see they've got £485,000 worth of fixed assets there. So that would be a question that we're going to come to. We can see the cash in bank is only £12,000. So that was what was actually in their account at the last time of submitting the accounts. So just moving quickly down as well, just one last thing. I can see that their account reserve is around the £370,000 mark. So they've got retained profits from previous years by the looks of it. So here's a few things I would look at. So what if I'm going to speak to a customer, I would be asking why are your trade debtors that much outstanding? Is it becoming an issue? Is it putting a squeeze on your cash flow? What would you see if you saw trade debtors that high? What would that tell you?
I would say exactly what you were saying there, that what's your cash collection like? Do you have a credit control process in place? Do you find that customers are actually slower paying you? Because in any haulage business, as you rightfully said, those slow payments really start to stretch the cash flow because they've got daily expenditures such as fuel, which is massive. And quite commonly, if they're employing people with a business of this size, 500,000 of assets, you would like to think that they've got some staff in there as well.
Yeah.
They're paying them on a weekly wage.
Yeah.
If they're not getting paid by Tesco, Asda, DHL, Amazon, whoever it might be, whoever their customer might be, then that's going to...
It could be 60 days quite often, isn't it? 60 days, even 90 days with some of the supermarkets. So what we're looking at there, is this a potential issue? And that's what we're trying to find out. Is that... Now the only problem is that this is publicly available information, but that is a year old. So I'd be asking, so what is it now? So that was September 23. We're now in October 24. What's that figure like now? And is it putting a squeeze on your working capital? Have you had to get any external financing? So at the moment, and the cash is low there. So what we'd also look at here, are you using your own funds? Are you self-funding this business? And we would look at the potential risks involved in that. So have you got credit insurance, bad debt protection? You've got all that money outstanding, but what happens if that customer, if it becomes a bad debt and that customer, okay, it's probably unlikely for the supermarket, but if you're working for other haulage companies and they're in trouble, how have you protected that revenue?
Yeah, because like you said there, credit insurance, bad debt protection, we recently had a report through, didn't we, 40% of customers have taken, 40% of business owners rather, in the past 12 months have taken a bad debt. Well, over the next 12 months, if that sustains, the likelihood is, the chances are they're stacked against you. You will take a bad debt of some form. So having that protection there is fundamental, in my opinion.
Yeah.
We've had 2 inquiries in already this week about credit insurance.
Yeah, absolutely. So that's something that we would definitely highlight for the cost of it. It's not massively. I don't think it's massively expensive, credit insurance.
No, absolutely not. We did 3 million of cover for a construction business week before last, cost them £15,000 for the whole year of cover. Well, that's pretty good value because, you know, £15,000 to cover 3 million of turnover, and is giving them the ability to take on a new contract, which is far outweighed the cost of the credit insurance.
Yeah, absolutely. Because that's the problem. You're risking your own money, and you've got no credit insurance. That's gone. And that report was, I think the average was £39,000 was the average bad debt. So that's a big hit for anyone, isn't it?
Massive, yeah.
So we'd be asking them about that. So really there, so we're starting to shape the solution now. We're looking at the future. Are you expanding? Are you buying more vehicles? So you can see you've got the assets there, tangible fixed assets, as we said, nearly £500,000 worth of assets. Now, how are you procuring those assets? Are you paying cash? Are you using asset finance? Are you using just the same asset finance lender? Are you going direct and just using the same lender every time because you've got a good relationship? Or are you using a broker that's searching the market every time to get you the best rate? So that would be something that you would ask as well, isn't it?
Yeah, and we had a call with an asset finance lender earlier this week who is talking about revolving credit, or rather talking about a line of credit in asset finance.
Yeah.
So instead of having to apply each time for a new asset, for asset finance, they've got a line of credit and they just draw down off of that line of credit for that particular truck, trailer, digger, really vehicle, whatever that.
It's like a 12 months. You've got this line of credit for 12 months, pre-approved, anything you need. Just a much quicker and easier process, isn't it?
Absolutely.
Especially when they're growing. When you're growing so quickly, and this is my concern sometimes, when a company is starting to win lots of new contracts and they're growing really quickly, have they actually got time to go, well, I'm going to search the market and see who will give it. Often they just go, well, just for this one, just go with them. We used them last time. And it could be costing potentially thousands of pounds if you're doing that every time. So I always think it's best to sense check, get someone like ourselves to search the market for you, a complete market search, just to make sure that you're not throwing away money that you're working hard for.
Yeah, agreed.
So that's the type of so I would speak to them, and those are the type of things that I would bring up, and just ask if they've got any concerns, ask what their future plans are. Was there anything else you would potentially ask a client like that?
I would say that's really insightful. Hopefully giving the viewers something to think about, how we identify opportunities and how they can identify opportunities within their own business if something in there resonates with them. Low cash in bank, slow payment terms, potentially high value of assets. How can I find a solution to support cash flow?
Yeah, so we do a lot. We do a lot of invoice finance in Haulage because it's a nice clean paper trail, and invoice finance lenders love haulage companies. But yeah, it might just be a case that they've got a temporary, every now and again they get a temporary cash flow issue. So it might be single invoice finance. If it's an ongoing issue, it might be a full invoice factoring or discounting facility. It could be a revolving credit facility. They might just need £100,000 buffer. It might be gets to the end of the year and the corporation tax is due and they've got a couple of £100,000 outstanding. They go, what am I going to do? That would be a corporation tax loan, or even a VAT loan if it's just a tough quarter and they're waiting for a lot of money to come in. Could just be a simple VAT loan. So that's what we do. There's so many different products, and we just try and dig deep, understand the business, find out where they're going, find out where the potential challenges or concerns are, and we make our recommendations
and find a solution from there.
Yeah. So yeah, I hope that was useful.
I think it's a good place to leave it there then.
I think we'll leave it there. So thank you very much for joining us, wherever you're watching or listening to us. We appreciate it, and please give us any feedback. And if you're watching on YouTube, please like and subscribe. We'll see you on the next one.
Thank you for watching. If you have any commercial finance requirements, please visit us at thebestgroup.co.uk. See you on the next episode.